All right, welcome back for the episode of Carnivore Trades. Today is Monday, March 6, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So we had a nice surge this morning and a little bit of a reversal here in the afternoon. So stocks kind of gapping up here. And I said to my members in the forum, in our community, it looks a little trappy here. One of the things I said, it was almost kind of the same way last Thursday when we gapped down. I said, it feels a little trappy here. We might rally. Today, this felt trappy as well. Market's just getting that kind of gap up here. We went from really, it's almost like there was no bulls to speak of Thursday morning. To by Friday afternoon, anybody with a bearish take was getting absolutely annihilated and dunked on. And just for us to gap up like that again on what? The fact that a non-voting Fed president said that we might pause by summer, and then the very next morning, an actual voting Fed president said that rates are going to have to stay higher for longer. It just felt like hot air. The market's going to do what it wants to. We said this anyway, right? We're kind of oversold going to this area here. We're going to need a lower high if the bear's going to want to break this. We may have that set up right now. One of the first things that was concerning as, for somebody who would be bullish here is this jumped out at me first thing in the morning, IWM here. So Russell 2000, you see the gap up here, the Qs, the spiders, the Dow. Russell gaps up and immediately sells lower high, and it was off to the races to the downside all day long, working on an engulfing reversal. And if you take a look at the RTY futures here, it still has a pretty good looking bearish inside bar with a 20 MA rejection and an engulfing reversal there. Why does this matter? Well, the Russell's the risk, it's a risk index, a small cap index. And to go with that, another thing, the VIX today gapped up, was green. We know when the VIX gaps up with the spiders, usually it can mean a warning sign. People are buying some protection here. And right now you still have potentially higher lows here on the VIX, so something to watch. But more so than that, look at Apple today. This was doing all of the lifting up, it was up over 3% at one point. Big time inverted hammer shooting star candle there on the daily. Right now you see it coming in pretty sharply, but this was doing all the heavy lifting. Apple, Google was doing a lot of it. Google's still holding some of the gains though, so that remains a little bit on the stronger side. And then the last one was Microsoft, but really outside of those three, and that did fade as well, but outside of those three, not a lot going on. And that's all it takes really. If Google, Apple, and Microsoft are up, the market's generally going to be up, despite what everything else is doing. And to me, when breadth is that bad and advanced decline is that bad, and it was pretty bad even when we were at the highs today, that's kind of a red flag, especially when I see the Russell not just underperforming. It's one thing for it to be underperforming, but this was barfing. Even as the spiders were moving higher, the semis were also underperforming as well. We had had a flattish kind of open. We surged up with everything else, and then this topped out pretty sharply. Semis underperforming. Transport's also underperforming as well. So down almost 1% on the day in a flat market. These are signs that the market is looking to roll over as extended. And another thing, looking back at the spiders again, just the last couple of days, this is just, you built no supports here. So, again, this is just gamma squeezing, short squeezing. Again, we just got too bearish down here. We had to go. We had to retrace. Granted, it was an impressive rally, but when you build no supports, that means there's no real buyers here. So this can go down just as quickly as it went up. And it's also suspect here. I never like it when, I'm like, if I was long, I would be suspect of a gap up in front of Powell talking, especially when you've already rallied 120 points on the on the SPX, and then into today, 140. So, 14 SPY points in less than 3 days ahead of the central bank, president talking. So essentially what that's doing is it's pricing in any dovishness, and it's completely negating any hawkishness. So if he comes out hawkish, this is set up to fall. Another thing, and you guys already know I'm going to bring it up, but the 2-year is, softer than whatever you want to call it. I don't know. Can't think of an analogy right there. It's 2-year, very, very weak here, down 6 basis points. Let's look at the 2-year yield here, and I'm going to go over the European markets. I'm not going to forget it today, so I have them up there. The 2-year yield at 4.89 here, and again, we're knocking on that 5% door. So we hit double top, and what kind of, I mean, does this look like a hard rejection? You know, when you hit double top and you want it to be bearish, you want to see a a hard sell, right? This is not a hard sell. This is just consolidation. Another thing, 2s and 10s hit a new low, so down 92 basis points, or inverted by 92 basis, over almost 93 basis points here, before flattening out around 90 and a half. But again, these are all just warning signs. Maybe the bond market is dumber than the smart stock market for the first time in history. But again, this is the types of things we got to look for here. But either way, nice move off the lows here. We worked off that oversold condition. If we put in a lower high and come back down, the bears will have enough momentum to get through that 200 moving average. That's 1, 2, 3 hits on it on the daily. So if we come down here, don't expect this to hold, and I wouldn't expect this trend line, the all-time high trend line, to hold either, because we've gotten very close to it. But for now, we'll see what Powell says. We have JOLTS Wednesday, and then we have NFP on Friday, so those are going to be some important numbers, and obviously they will be market moving. All right, over to the triple Qs here. So again, we did gap above the 20-day moving average here, and we're coming back in another inverted hammer as well. We did fill this gap up here. So again, we'll see what the Qs do. It is, had a nice move here off the lows. Again, 288 all the way up to a high of 304 today. So 16 points there. Big move on the Qs. And I think we talked about this area, this gap over the weekend that got filled. So we'll see what type of move we get. But again, the same kind of look here. Just straight up. There's no support being built here, so if you get a hawkish Powell tomorrow, this can come right back down. The Russell we already covered. You got an engulfing reversal there on the daily. What they might save it. It's basically by a couple pennies right now. Maybe they save it in the next 10 minutes. Who cares? It's basically close enough. Not a good look there to get rejected at that 20 moving average. A pullback. What the bulls wanted today. Basically, I'll try and put it in perspective here. You didn't want a gap up. If anything, you wanted a gap down, or maybe a slight gap up and then kind of just sideways action. That surge today, I mean, that's the opposite of what you wanted. Now you have a red to green day on the IWM, the Dow transports, and the semiconductors. Is not a good look here. You wanted an inside hammer today. You got an engulfing reversal. So not a good look there for the IWM. The Dow here, again, we talked about this necktie, 50 and 20 moving average. That would be resistance along with this trend line and the red bar high. Sure enough, it's pulling back off that with a little inverted hammer there. So again, we'll see how that behaves, but potential lower highs now on the diamond. Again, we'll watch that 331 level. That's been important here. All right, over to the semis. What was the level I gave you? 248. 247.93 was the high of the day. I said 250 on overshoot. Obviously, we didn't get there. That has come back in. So no confirmation above the 20 moving average right now for the semis. Again, there's room for a higher low. I can't say that there isn't. But a nice rejection off of that area in that gap fill. Again, we're watching possible. Again, it's possible. It hasn't triggered yet. But you do have a daily possible head and shoulders there. And that would, probably take you right back down to this gap here. So we'll watch the semis there. NVIDIA did have a nice move, but came back in here. It's still holding trend, though, so we'll respect it for now. But again, semis, red to green day. Same thing with cloud, red to green here. It's trying to hold the flat line right now. Again, possible lower highs here on cloud software. In fact, if you we can take this right now. We got a little trend line there, and we try to get through that. And you can see we're back below that. So we'll watch the IGV there, possible trend line here on the daily going to tomorrow. But again, little pullback there off of off that area. Again, it's holding up for now. We'll leave it at that. Transports, which we talked about. I said 15.3. We didn't even get anywhere near there. We did fill this gap here, but again, closing above the 20 and now closing back below it. So this has some more work to do. Again, possible lower highs here. We'll continue to watch that. But again, this was a definite red flag this morning. Just take a look at the price action. So kind of a flat open, and then it moved up and it started to go negative pretty quickly, well before the spiders did. So showing a little bit of weakness there were the transports. Anyways, we talked about the 2-year a little bit. Let's look at the 10-year yield. So again, like I said over the weekend, this is just the trend is back up now. I mean, we moved up here, moving averages start to tighten, and now they're expanding as we move up here. So I know we had an outside day that got reversed, but we're right back up here on the 10-year. This is in good shape. The 30-year is also in good shape. The TYX trend is starting to move back up here in these bond yields. And again, the 2-year note trend is way down, and we're basically just got a dead cat bounce off the bottom. If you were a 2-year bull, you want to see this V shape, and it is doing the exact opposite. So not a good look for bond land. Let's look at HYG here. Yeah, nice little kind of gap and then fade here as well. Basically kissed that 200 moving average and then just kind of coming back in. I do not like this chart. On the weekly, bear flag. Same thing on the monthly, bearish and sidebar. Not a good look. All right, over to housing. Let's get XHB. So XHB, gap and crap, just like a lot of other names here, back below that 20 moving average. Again, I told you guys I do think this is topped out. I don't think it gets through 70. Maybe a nominal move, but that's about it. ITB also on the weaker side, down 1.25. And again, 20-day moving average rejection there, and possible lower highs now on that as well. VNQ, same thing. So there's a 50 MA rejection on VNQ. Again, the high still could get up to 88 and change, but we'll see it, just one day off that 50 moving average. It may not even get there. So anyways, XLF, this is interesting. So let's actually start with KRE. So regionals, this is a really soft looking chart. Sell, it's just taking the stairs down and now just consolidating beneath that 50 MA, a rejection there. That's a weak looking chart. XLF is green. But honestly, if it wasn't for Berkshire, and this might just be a flight to safety. I'm not sure. I mean, Berkshire does have a lot of Apple in it, and that got upgraded by Goldman Sachs and Morgan Stanley, which that should be a red flag right there. But if Berkshire wasn't up, JPM down 51 basis points, Bank of America red, Wells Fargo red, Citigroup, Goldman. Really, BRKB is holding up the XLF here, but either way, we went up into that 50 MA or 20 MA and that red bar high, and we got rejected here. So again, I do think this is setting up for a move lower. Fins obviously under pressure here. Not a good look there with KRE going green to red. Broker dealers green to red as well, back below the 20 MA. If this goes sideways, this could be setting up for a move towards this lower trend line, which coincides with that 100-day moving average. All right, over to energy. So crude futures here continuing to push up, hanging in there okay. I can't say anything wrong with it right now. You are trying to peak above that 100 moving average. It is minor, but it's a psychological level. And to be fair, you got 2 tail candles in a row. So crude building a little bit of momentum here. See on the intraday here, that big sell on Friday. We had a good sell today and a nice tail candle again. This may be turning around, I'm not sure here. We got to wait for that weekly close, but this could turn into a possible impulsive move to the upside. Take a look at gasoline futures. The RB here, that's a triggered inverse head and shoulders. So that's, that's certainly could play out here. You're onto the 200. If you pull back and hold this trend line, this can go a lot higher. So just be aware of that. So energy is interesting to me right now. But again, we got to get above that 82.72 area on the weekly close. XLE, really quiet day here. One of the only names that was red to green. So we gapped down on XLE and went positive, whereas everything else was a gap up and then a fade. But again, it's holding up. Again, these are bigger picture consolidation patterns. This is the XOP with an inside day. Nothing really to say there. OIH an inside day as well. That's holding up really well. So nothing really going on there. Nat gas pulling back here to the tune of 13%. It is off the lows here, hitting that 20 moving average. And basically what happened is, I think very similar to the spiders, where we went from, nobody wanted to buy it. Everybody was calling for $1.50 down here. And then within 8 days, everybody was calling for the bottoms in, it's going to be the trade of the year, that type of thing. And I think this is a shakeout here. I do expect higher lows. 250 is a good area of support for the net gas futures. We could get to 235 though. I wouldn't rule out a gap fill there, but I do expect a higher low, and this will go up to $4 before you know it. All right, over to the dollar index. So still holding up here. Again, up move, flag again. Below resistance. This should have a nice move up here, but it's hanging in there, just doing some consolidation. On gold, so gold is fractionally lower here. Again, it's hanging in there, nothing terrible. Again, I'm not in love with this bounce. Could it go a little bit higher? It certainly can, but I am still expecting, that to take this pivot out here and get down to at least this level in the somewhat to near term. But again, it's holding up okay. I have more of a bull bias on the dollar, so again, like I'm not in love with these bounces here on the PM. Same thing with silver there, fading a lot of those gains from Friday. And you do have an inside bar here now on the daily time frame. So if this consolidates, it's setting up for a move lower. But again, I will be interested in it on another leg down. Platinum bucking the trend and holding up well. Again, I think this wants 1,000, so we'll watch for that over the next couple of days. And then copper here also hanging in there. Still daily lower highs. I do like this still for a move down to 375. All right, over to Bitcoin here, and then we'll cover Europe. So Bitcoin took a little bit of dump last week on Friday, and now we have a bearish inside bar here on the daily. So we'll be watching for this. So we came up here, inside bar, down move, another inside bar. If this consolidates sideways, get out of the way because it's going to push through this support here. So right now, it looks to me like it's trying to consolidate to get through this green bar. And it's in the lower end of that green bar. And this consolidates more, it will go right through that. Again, ask yourself, did we build supports on this run up? Answer is no. So be careful with Bitcoin here. One thing that's interesting to me, you take a look at like Coinbase. This was up decently earlier today. Same thing with like Riot. Riot's actually hanging on right now. Marathon. Some of these names were green earlier this morning with Bitcoin red. And that just tells me that the move in equities was just more of a short squeeze than anything because Bitcoin was red all day long. So just a little interesting dynamic there. But again, just be careful with Bitcoin right now. All right, over to Europe here. So let's look at the Euro 50. It's hanging in here. We're at 4,300. A little bit of an inside day here. I am not in love with the European markets here. This is really overbought up here. And the same thing with the UK. So right in that 79. Did get above that 8,000 handle here. But again, very overbought. You had a little pullback here, kind of inside of that. It's holding up okay. And the DAX as well. A nice little outside move there. It had an update today, but there's a lot of resistance up here on these charts. Just above where we are. Now we're holding up. We're hanging in there okay. There's nothing terrible with it right now. But when the spiders roll over, these are going to roll over pretty hard. So just be careful with them. Nifty 50 as well, or excuse me, not Nifty, Bombay Sensex. This one I'm also watching here. Got rejected to that 50 moving average. If it gets through that, it can get up to 61. But there's a ton of resistance up here as well. So again, I'm not seeing a ton of upside. They're holding up well for now. We'll give them the benefit of the doubt. But it's all about the spiders here. If the spiders roll over, then all of these will roll over as well. All right, lastly, let's take a look here. So, it looks like they're trying to save that engulfing candle on the Russell. I mean, it doesn't really amount to much if you ask me here. I mean, it's still a massive reversal there. But yeah, spiders basically flat, green to red day. Call it a pullback if you want. But I don't think we built any supports up here. And I think the Russell, the semis, and the transports are trying to tell us something going into tomorrow. Remember, jobs Wednesday, Powell tomorrow and Wednesday. And more jobs on Friday. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.